Hi, I'm Mickey Fulp, mercenary geologist, coming to you once again from beautiful downtown Vancouver, the most beautiful city in the world when the sun shines. Doesn't always do that, but it's the middle of summer and the sun's shining. I'm here with Amir Adnani, chairman of the board of Gold Mining, Inc.
Good to be with you, Mickey. It is beautiful in Vancouver.
It is. So let's get a little background here. Gold Mining Inc. started life as Brazil Resources Inc., an explorer developer. I'm proud to say I was a pre-IPO shareholder of that company.
I remember that.
And remain a committed shareholder. What a great symbol, GOLD. I'm not sure how you pulled that coup, but the company's evolved from an explorer developer in Brazil into what now I would call a consolidator, a project generator / gold bank. So why don't you elaborate on that idea a bit?
Well, I mean, first of all, with the IPO, speaking of which, you're talking about that pre-IPO investment that you made, and which I appreciate very much. And when we IPO'd in summer of 2011 at 65 cents a share or something like that.
Of the market.
Despite the fact that it was the top of the market, while just about everything else, including the TSX venture, is off 70% since that IPO. We're up 150% since that IPO.
I'm a very happy shareholder.
So I think, but I think that, I think my point there is that it speaks to perhaps the timeliness of the strategy. The strategy being that we have a very cyclical business in commodities and in mining.
Yeah.
And we typically have many of the same patterns that start to develop when we have a bear market or when we end up within a severe bear market, which is you just get a total reduction in exploration expenditures. Majors just don't do anything on exploration. Junior companies become constrained from a capital point of view. And you end up in a situation where you can find and buy assets for cents on the dollar.
True.
And this, in the mining business, in my mind, one of the key ingredients to creating shareholder value is what you pay for an asset. If you're buying at the top of the market, which sometimes the majors have done that.
Majors tend
Not
to do
just
that.
majors, but you know, that
True.
deals happen at
True.
the top of the market. It becomes very challenging. And when you do deals, I think at the right time, especially when there's difficulty in the market. And look, the last year, the majors have also been busy looking for resources. Why?
True.
Their pipelines of resources for gold is at a decade low. And so when we think about where the next 5 or 10 years of new projects, new resources can come from, we have a very empty pipeline in the industry. And so for Brazil Resources, of course, we started life, as you point out, in Brazil. Brazil's a big country. We've been focused in one state, so we've been very focused. You know, Pará state in the north. We started life in Brazil because Brazil and Latin America's oldest investment house, Brazil Invest, has been a strategic partner of ours, a 10% shareholder. The chairman of that bank, Mario Garnero, sits on our board of directors. Right. So a great partner to have, and we decided to look for opportunities where we can find resource stage projects. So where you have a 43-101 resource, even metallurgy work or engineering work that has been done, like on our São Jorge project, there was work done in that to that extent. Consolidate these projects and continue to look for acquisition opportunities as long as the market is weak or lukewarm. Now, coming back to the name change, that was really driven by the fact that since the summer of 2015, almost 2 years now, our horizons have certainly expanded beyond, beyond just Brazil, right? And you're right, because it was at first kind of like this, and then it just, we've built in my mind, quite a significant business. We're now in Alaska with our Whistler project. Of course, in Brazil and Pará state, we have 4 separate projects.
Right.
In the central cocoa belt of Colombia, in central Colombia, we've now consolidated 2 projects there, putting it into what looks to be a much bigger play, 2 separate public companies that we did deals with, and just recently, Canada's Northwest Territories. So I'm, you know, Brazil Resources just was not obviously fitting of what we have developed. And so that's a long answer to your question about the name change, but we felt that once we found out that we won the lottery, I feel like it was winning the lottery, getting the ticker symbol gold. It was a cool symbol to be able to get, especially with the very large resource base that we've put together now with about 11 million ounces of gold equivalent resources measured and indicated, and 13 million ounces gold equivalent resources
so you can't
inferred.
Talk about that addition, but I can. That's 24.4 million ounces total.
That's a lot of ounces.
That's a lot of ounces.
That's a lot of ounces.
Gold equivalent.
So
and it's mainly gold.
It is, and so the rebranding is now 7 months old as Gold Mining instead of Brazil Resources, new ticker, etc. And year to date, obviously, as we all know, the gold price has been kind of range bound, lower obviously on average compared to what it was last year. But I love it. It's just sort of like the bipolar personality that I have when I see the price down.
Opportunities. You know, we all love low prices if we're speculators.
Exactly.
So,
exactly.
Gives you buying ops.
That's right. So you look at this latest acquisition in Canada, in the Northwest Territories, and just let's look at the numbers to appreciate how attractive it can be to buy projects at the bottom of the cycle. So the total dilution to our company, it was about 4 million shares, which is about 3% dilution.
3%, right, yeah.
The transaction value would have been about $6.5 million. Historic spent on the project, which includes over 200,000 meters of diamond drilling, would have cost $60 million or close to maybe even $70 million to replicate. So a true case of sort of 10 cents on the dollar, feasibility stage project. And you look at areas like Northwest Territories, this is Canada's north, that are now actually one of the hottest areas for major companies to invest in. Agnico Eagle has a $1.2 billion capital expenditure program for Canada's north. You've seen Goldcorp's entry into places like Yukon, and ultimately these are areas that are massive in terms of size of land, that are underexplored and that are still in a geopolitically stable jurisdiction. So quite pleased with the fact that you can still find these types of opportunities out there. And our team has now demonstrated after 7 years that if you have a 7-year track record where year in and year out, you've managed to identify projects, make those acquisitions and complete them, I think now we're starting to get that momentum and also credibility with the market that says when it comes to consolidations, this company, Gold Mining, has demonstrated after 7 years that they can do deals. And by the way, we're not doing 10 deals a year because there aren't that many quality projects out there, nor are we interested to just buy because something is cheap. We've averaged maybe 1 or 2 acquisitions a year. I mean, so it goes exactly. So it goes to show you the amount of time and selection and criteria
and
that goes
in. It takes to find them and make a deal on them and get that deal closed. It's a time-consuming endeavor.
Exactly, and I feel like I've spoken with you about just about every one of those acquisitions. You've seen us on this adventure throughout the Americas as we've put the portfolio together.
Right, right. Let's still talk a little bit about the share structure of Brazil. See, I'm still doing that, of Gold Mining Inc.
Don't worry, I do it sometimes too.
Okay, well, I don't feel so bad.
No, that's okay.
Share structure still tightly held. I think 130 million shares outstanding now. Not bad for a company that's got 7 years and all these acquisitions that you haven't paid a red cent for, basically share-only acquisitions, and a chunk of cash in the bank and really strong shareholder base.
The key part of this whole strategy has been managing cost and dilution, because as you go out there and make acquisitions, it's so important that you can preserve cash when possible and issue stock, but in a highly accretive fashion. And again, if this was a business school discussion, it would be one thing, but after 7 years, you can see that we have been very prudent, very tight, and making sure that after all these deals that we've done, we only have about 130 million or so shares outstanding. That's a great capital structure for a company that's amassed as much as we have in terms of resources. As of our latest financials or whatnot, there was close to $20 million of cash on hand, no debt. Key is to stay debt-free, and we're debt-free. We've continued to maintain a very low burn rate, and that's because insiders of the company own 25% of the business. We have a lot of thick skin in the game. I'm the largest individual shareholder. In 2013-14, when it was impossible to raise money, we were the first people to put money into it. And so I think there's a true sense of that alignment with our shareholders. And our shareholders see that. You look at people like Rick Rule and Sprott Asset Management, we're here at their show, and you look at Mario Garnero, the head of the oldest investment house in Brazil. You look at the, we've had since day one as an investor, the KCR fund, which is managed by Amir and Katusa, Doug Casey. For them to have been backers of this business for 7 years, it's really special. I mean, in this business, you look at how we have so much short-term trading and things.
Speaks highly of you and their confidence in you too. Amir.
I appreciate it, but I think it's been a great team effort to execute.
True.
You know how it is. I mean, it's one thing to just have a great team, but a great team has to execute. It's one thing to have a strategy, but you got to execute. And so I think the key here is you get that right blend. And I feel more than ever the investors out there. They don't have hundreds of companies to pick from with quality projects or sizable resource that way. We're in the 1% club in terms of the club of companies.
Look at the companies here. You're part of the 1%.
It's a small group of companies that have done well to keep things together, and is what has been a 6-year bear market for gold. I mean, gold had a decent 6-month run last year, but it has generally been difficult 5 or 6 years. And so if you're doing something right, I think it attracts the right investors, and you can continue executing. So it's an exciting position to be in for gold mining right now.
Yep. Let's once again turn the tables a bit and talk about another asset you have that is in the Athabasca Basin. I look on it a bit of an orphan within the company, but the time will come, and I can speculate that will eventually lead to some sort of divestiture or spin out. Or would you like to address that?
It was a great deal of serendipity that we ended up with this project. It's the Rhea uranium project. It's serendipity because obviously I'm very involved in the uranium business. So we know a thing or two about the uranium business. Western Athabasca, we made an acquisition of a gold company called Brazilian Gold back in 2013. And they had this non-core property, the Rhea property in Western Athabasca. No one thought much of Western Athabasca then. Companies like Fission and NextGen were just kind of getting going. Exactly. So since then, that area has evolved into a really hot address for uranium exploration. We have over 100,000 hectares, and the French government's nuclear company, Areva, as a 25% joint venture partner. We're one of the only juniors in Western Athabasca that actually has a major player as a joint venture partner at the project level. And uranium prices, though, are in the toilet. I mean, part of my language, I mean, it's just a really miserable time, $20 per pound. Of course, I love it, right? Because, for us, this is the environment where we can really thrive and be able to do things. But at the right time, when the uranium prices trend up, this project becomes a great optionality on uranium for gold mining shareholders, because we would spin it out in the long term. It doesn't really go with our gold assets. But when you've got Areva as a joint venture partner, you're in a right address with a great deal of regional activity.
And you're surrounding a deposit that Areva already owns.
That's an excellent point. Well, it's a deposit that Areva and Cameco jointly own. So
I was unaware of that.
Yeah, so it's Areva.
Well, that's those are the right potential partners.
And you're correct. That's the Maple River deposit that Areva and Cameco own. It's a very thin set of claims, and our property Rhea completely surrounds this very thin set of claims. Now, those thin set of claims, Maple River, it's a high-grade deposit and project that again Areva and Cameco jointly own. Some of the work done on our property, which is to the tune of $10 million, shows that the structures that host that Maple River deposit extend onto our property for as long as potentially 10 kilometers. And there are also parallel trends that have been identified that hasn't even been explored yet. Again, when you're talking about 100,000 hectares, it's a large property. So we're excited about that. It's not our main focus, of course, but like I said, we're very familiar with the uranium business. It becomes a great call option on uranium inside a gold company.
Absolutely. So, folks, If you're intrigued by Gold Mining Inc., take a look at it. Always do your own due diligence. I'm a committed shareholder of the company. I've known Amir about 8 years now. I appreciate the opportunity to come in early on what was then Brazil Resources Inc. But thanks for the information.
Thanks, Mickey. Always a pleasure.
All right. And folks, stay tuned. Ciao for now.